Fed is backing away from quantitative easing now. And so that obviously is going to weigh heavily on the cost of financing these deficits to the detriment of the rest of the economy. But still, I don't think the public makes the connection between the deficit spending and inflation or the backup in interest rates. But I think over the next couple of years, that may be a different story, and there may be some type of impetus to reduce spending. But for now, they keep on spending money, and so the inflation problem is going to get worse. And it's not just the discretionary spending, because that's what this $1.7 trillion spending bill was. That was the discretionary spending, but we have most of the spending on autopilot. And it's not just on autopilot, it's going up every year because all these programs automatically increase spending. And a lot of them are indexed to some type of inflation rate, the CPI. And so we know they're going up even more now. So that's an even bigger problem than the discretionary is Social Security and Medicare and all these things that they don't even vote on that are just automatic.
Wow. So more spending, more inflation, more suffering across the USA, basically.
Yeah, well, all of this government has to be paid for. The public has to pick up the cost of all these programs, and nobody's taxes are being raised. And so the public has to ask the question, well, if I'm not being taxed, where's the money coming from? How is the government spending this money? Well, they're spending it because the Federal Reserve creates it. But that doesn't mean that there's no cost, because if that was true, then let's just eliminate all taxes and just have the Fed print up all the money and everybody gets government for free. Well, there's no free lunch. And whenever the government spends newly printed money into circulation, it diminishes the value of the money that's already there. So if you have money that you saved or that you've earned, and the government runs deficits and creates money and spends it, then the value of all your money goes down. And the way you see that is the price of everything you buy goes up. And we talk about that or label it inflation, but it's not inflation. The inflation was the expansion of the money supply. The result of inflation is that the price of everything went up, but the difference, what you pay, the extra cost of all these goods and services amounts to a tax. So instead of paying for government spending through higher income taxes, you pay through higher inflation. It's higher prices that you end up paying. See, if the government took my money, then I would have less money to spend, and so I would end up with less stuff. But if the government just takes my purchasing power through inflation, I have the same amount of money, but I end up buying less stuff because the stuff costs more. And so the stuff that I can no longer afford to buy, well, that's the tax. Somebody else spent that money. The recipient of a government check got to buy the things that I can no longer afford because prices went up. Got representation, but it's taxation without a vote, without any consequences, without the taxers being held accountable or responsible. It's just stealth tax. It's a tax that people don't recognize they're paying. But it's also the most regressive of all taxes because it falls hardest on really those who can least afford it. And that is the middle class or the working poor. They just get clobbered by inflation. When you're rich, the inflation tax is a nuisance at most. Mm-hmm. If the cost of living goes up, if you're only spending 10%, let's say, or 5% of your income, and the rest of it you're just investing. If the cost of living goes up, you don't suffer. Maybe you invest a little less, so the economy suffers because there's not as much investment capital, and so you don't have as much economic growth. You don't have as much job creation. But the wealthy people who cut back on their investing to pay higher food prices or things like that, their standard of living doesn't decline. Maybe their children will inherit less. I don't know, but they're fine. But when you're living paycheck to paycheck, when pretty much you're spending all your money on food and energy and rent and utilities and taxes and insurance, when prices go up 10, 20%, it is a big, big deal. Credit is still too plentiful thanks to the Fed. What people need to be doing is stop buying stuff that they can't afford. They need to tear up those credit cards and save, but they're not going to do that unless the Fed raises interest rates well above the inflation rate, which they're not going to do because the people who are in debt can't afford to pay, and we'd have a financial crisis. So the Fed could pretend that it's going to fight inflation, but it's not actually prepared to fight it. Because if it did it, it would have an even bigger problem on its hands, at least from its perspective, and that would be a complete economic collapse and financial crisis. And we wouldn't be talking about whether or not we're in recession. We'd be talking about whether or not it's a recession or a depression. Everything ebbs and flows. And sure, you're going to have inflation picking up and then easing back. I mean, I'm talking about prices, not actual inflation. But sure. Especially when you're looking back year over year and you have a big rise. And then obviously when you look backwards, you may find that, okay, prices are not accelerating at the same rate they were, but they're still accelerating at a rate that's well above 2%. I mean, we're not even close to that.
Yeah.
But even if we pull back to where it's 4 or 5 or 6%, who's to say a few months later it's not 10, 11, 12%?
Yeah.
Because all of the inflationary policies are still intact. And I think that next year the Fed's going to return to QE. I don't think they can keep up the quantitative tightening for much longer. They tried it back in 2018, but they had to give it up by the end of the year because of the damage to the markets and the economy. Well, it's doing as much damage, if not more now, because the economy is even more over leveraged now than it was then, thanks to all the additional years of quantitative easing and 0% interest rates that allow the economy to go even deeper into debt. And so now it's even more dependent on low interest rates and therefore an even bigger collapse when those low rates are removed. The air is coming out, but whenever enough of it comes out, the Fed just blows more back in. That's the way they've been operating. Well, it's already gone on longer than I would have thought a decade ago. So we're living literally on borrowed time. The whole thing can implode at any moment. But I think the fact that we have had this now outburst in inflation, that kind of lets you know that we're nearing the end of the line, because the only reason the Fed was able to get away with all this was because they could claim we didn't have enough inflation. They were able to point to a CPI that was below 2%, and they said, hey, we don't even have enough inflation yet. We can print all this money. We can keep rates down because, we're still below our target. But now that they're miles above the target, there really is no excuse to create more inflation. But that's the only tool the Fed has in its toolkit. I mean, every problem it's confronted, it's solved with inflation. Well, now that inflation itself has become the problem, they've got no tools. You can't solve the inflation problem by creating more inflation.